Hello and welcome to another video on accounting. We are continuing our discussion of accounting cycle. So what is accounting cycle? Well, accounting cycle are steps followed by accountant to prepare financial statements. There are 8 steps. Now in our last video we talked about the first step, which was analyzing and journalizing transactions. In this video we are going to talk about the next 2 steps: posting journal transactions to ledger and preparing unadjusted trial balance. So what is posting to ledger? Now you will hear this as posting to ledger or sometimes only referred to as posting. Now posting means that transferring the journal entries to ledger accounts. Now, every company has ledgers, and the ledger is a collection of all the accounts maintained by a company. There are different types of ledgers a company can keep, but the one that we are going to be using or referring to will be called the journal ledger. Now, journal ledger is where all the accounts of assets, liability, revenue, expenses are kept by the business. Now the question comes up is, why do we need to post to ledger accounts? Now the reason is because companies want to have information about each account in one place. Let me help you understand this with an example. You can see this journal, the general journal, which we did in our first video. So you could see that the cash transactions are everywhere, line 1, line 4, and so on. Now all these cash transactions are everywhere. We want to see all that cash transaction in one place. So what we do is that we create a ledger account, and you could see that all transactions are here. Now, what is the format of ledger account? Well, there could be a computerized format which looks something like this. So here we have a column for dates, a column for explanation, a reference column, a debit and a credit column, and finally it has a balance column. Now, if you are using computer software such as QuickBook and you want to see the ledger account for cash, it will look like this. So it is different from the one that which is called the T account format. Now the T account format is used for teaching and learning purposes. It's easy to illustrate examples using the T account. So it looks like this. It's essentially a T with the name of the title, the name of the account in the center. Left side is a debit side, the right side is a credit side. So if you compare this T account format to the computerized format, you can see that the computerized format has some columns, additional columns for to keep additional information such as explanation and reference. There is also a column for balance. So sometimes the computerized format is also called a 3-column format because look, in the T account format we have a debit and a credit. That's the 2 columns. But in the computerized format we have an additional column of balance, which keeps the updates the balance after every transaction. So, but in our, as I said, for teaching and learning purposes, we use the T account format, and we will look at that in this video. So let's learn how to prepare ledger accounts, or in other words, let's post these journal entries to ledger accounts. Now the first step is to prepare a T. And the left side of the T is the debit side and the right side is the credit side. Now, once you have the T there, go to your journal entry. Look at line number 1. Now, in line number 1, you see under accounts cash. Now copy that cash and make it the title of your T account. So we copy the cash and make it the title of T account. Then we look at the date. and that we copy that on the debit side. Since we are looking at on the debit line of the journal entry, so it's going to information from here will go on to the debit side of the T account. So we copy the date on the debit side also. And lastly, we are going to copy the amount on the debit side as well. So essentially, what this is that you are copying the journal onto a T account. So you copy as you copy onto the T account the way you read the journal entry. So if you read the journal entry, it would be on January 1st, cash 80,000 debit. So you take that information and put it in the T account on the debit side. So let's look at the next line of the entry. Now the next line of the entry, again, I need a T account, and I will copy the word capital and make it the title of my T account. And then I'm going to copy the date. Now the date, since I'm copying the credit line of the journal entry onto the T account, so I will put that on the credit side. And finally, let's copy the amount. The amount 80,000 for capital is on the credit side, and we are going to copy that on the credit side as well. So once this copying is done, that means our first entry has been posted. So by posting, we essentially means just copy the information from the journal onto the right side of the T account. And you copy onto the T account the way you read the journal entry. So the first line was cash 80,000 debit. So we go to the cash T account and put 80,000 on the debit side. The next line was capital, Mark Hayden, 80,000 credit. So we go to the capital account and put 80,000 on the credit side. Now that is posted. I'm going to look at one more example to help you understand this. So the next line is a prepaid rent. So I'm going to open another T account and call it prepaid. Remember that every line that you see will have a T account. So here is a T account for prepaid. Again, $12,000 is on the debit side, copying the date and the 12,000 on the debit side of the prepaid account. Now the next line is the cash 12,000 credit. Now since I already have a cash account, I do not need to open a new account for cash. Remember that there should not be any duplicate accounts. So if you have a cash account already, you must not have another T account by the name of cash. So looking at the journal entry, cash 12,000 is credit. So I am going to put that on the credit side. So it's copying from the journal to the right side of the T account. Once you do all, you repeat this process for all the accounts, all the lines that you see in the journal, and make T accounts, and making sure that you do not create any duplicate accounts. Your T accounts will look like this. So now all the information from the journal has been transferred to the T accounts or the ledger account. This is known as posting. So now you can see that all cash information is in one place. Prepaid, account receivable, all that information is in one place here, which is the ledger. Now, when you post the transactions to the ledger, the next step is that we need to balance the T accounts. So all these T accounts or the ledger accounts that you see, we have to balance them so that we can prepare the trial balance, which is our next step. So what does balancing mean? So let's look at the cash account. The first thing you need to do is to draw a line under under the amounts in the cash account, and then subtract one side from the other and write the balance on the side which is higher. So what I will do in the cash account is add all the debit side, subtract that from the credit side, and then write the balance on the side which is higher. So in this case, the cash debit side is higher than the credit side by $93,675, and I wrote it on the debit side. Let's look at the prepaid rent account. So the prepaid rent account debit side is higher than the credit side by $12,000. So first I'm going to draw a line like that, and then subtracting one side from the other gives us a balance of 12,000 to be on the debit side. Let's balance the account receivable. So again, I'll draw a line first and subtract one side from the other. So we have $5,800 on the debit side and $3,000 on the credit side. So when we subtract them, it gives us a balance of 2,800, and we will write that on the side which is higher, which in this case it's a debit. So here's the balance on the debit side. Same thing we are going to do with the furniture. The balance will be on the debit side because that's higher than the credit side here. Let's look at the accounts payable. Again, the line, let's subtract one side from the other. So on the credit side, I have $4,900, and on the debit side, I have $3,900. This gives us a difference of 1,000, and I'm going to write this on the side that is higher. In this case, the credit side is higher, so I will write the balance on the credit side. Continuing the same thing with the tax payable, draw a line, subtract one side from the other. The credit side is higher than the debit side by $250, so the balance will be on the credit side. Same thing we will do with the loan account. The balance should be on the credit side. The capital account is higher. The credit side is higher in the capital account by 80,000 than the debit side, so the balance will go to the credit side. Drawings account, we have $325 on the debit side and zero on the credit, so that means the debit side is higher than the credit side by $325. So the balance will be written on the higher side. Last three accounts, legal fees revenue. So the credit side here is higher than the debit side. So we'll draw a line and write the balance on the credit side, which is $8,900. Salaries expense account is debit side is $1,200 higher than the credit. The balance will be here. Same will be for the tax expenses. So we have now balanced all the accounts. So balancing essentially means subtracting one side from the other and writing the difference on the side which is higher. So once we have done this balancing, we now are ready to prepare the trial balance. So what is a trial balance? Well, a trial balance is essentially a list of all the accounts in the ledger and their balances. What you will do is list all the accounts that you just looked at, which is cash, prepaid, account receivable, and so on, and we are going to copy their balances either on the debit side or on the credit side. So to prepare a trial balance, first you need to write the name of the company on the top, the word trial balance, and write the date on which you are preparing the trial balance. Then it will have three columns: an account column where you will copy all the names of the accounts that are in the ledger, and then if the balance of the account is on the debit side, just copy that on the debit side onto the trial balance. So let's look at that, how we do that. But remember that usually we need to keep the order of the accounts when we write them when we copy them from the ledger here. We need to keep them in the order of assets first, liabilities next, capital in drawings account will follow liabilities, and finally revenue and expenses will be written. So let's look at how we do that. So our first account in the ledger is the cash account. So as we just balance it, and the balance is $93,675. So what I will do is copy the name of the account cash into the cash side. And then since the balance is on the debit side, I will write that balance on the debit side of in the trial balance. Let's look at the prepaid. Again, I will copy the name prepaid, and then the balance is the debit balance in the prepaid account that will be copied onto the debit column of the trial balance. Account receivable also has a balance on the debit side, so I'm going to copy the name and copy the balance on the debit side. Furniture, similar thing. Let's copy the name of the furniture into the account section of the trial balance. And the balance in the furniture account is on the debit side. We will copy that onto the debit column. Looking at the accounts payable, so I'm going to copy the name accounts payable. And now let's look, the balance here is $1,000 on the credit side. So that means I have to copy this balance onto the trial balance in the credit column. So here is $1,000 in the credit column. Tax payable is similar thing, $250 is the balance in the account. So copying the name, and the balance is on the credit side. So I'll copy that onto the credit column in the trial balance. Bank loan, 25,000 balance on the credit side will also be copied onto the credit column of the trial balance. So let's copy the name first, and then we are going to copy the amount on the debit side. Capital, Mark Hayden, $80,000 on the credit side. So write the name of the capital account and then copy the amount on the credit side. Drawings, let's copy this name here. And since the balance is on the debit side, we will copy that balance on the debit onto the debit column in the trial balance. Legal fees revenue, let's copy that name. And then the balance is 8,900 credit side. So we will copy that onto the credit side of the trial balance. Salaries expense, copy that name here. And the balance is $1,200 on the debit side. That should go to the debit side of the trial balance also. Tax expenses, again, copy the name tax expenses. The balance is $250 on the debit side. We are going to put that on the debit side. Now, once we are done, we need to total both the debit column and the credit column. And the total must be the same. So let's look at the total here. So we have a total of 115,150 on the debit side and a total of 115,150 on the credit side. So the totals are equal. Now, remember these totals, one of the reasons for preparing to trial balance is to prove that our debits are equal to our credits. So as you can see here, the debits are equal to credits. That means we have no problem in the journal or in the posting. But if these are not equal, that should tell you that there could be an error in the journalizing or posting steps of the accounting cycle. So you need to go back and find those errors and correct them and calculate a new balance and bring that balance here so that the debits equal credit. So you can also see that the account names have been copied in the order of assets first, liabilities next, capital and drawings, revenue and expenses will be at the end of the trial balance. So the trial balance is equal. The debits are equal to credits. That should be good enough for us. And then we are going to move on to the next step of preparing financial statements, which we are going to do in the next video. But before we prepare financial statements, there is an adjusting entry step, which I have a complete video on that as well. So watch that video for the adjusting entries. But in our continuing this series, I will prepare financial statement from this trial balance to illustrate how the financial statements are prepared. So in summary, we looked at the two more steps, the second and the third step of the accounting cycle, which was posting to ledger, meaning taking information from the journal and putting into the T accounts. And then the T accounts are balanced and the balances come on to the trial balance. The reason for preparing trial balance is so that we can prove that our debits are equal to our credits. If they are not, there is an error in journalizing or posting. And trial balance also helps us to prepare financial statements. So it's very useful in preparing financial statements, which we are going to do in the next video. So I hope this video was helpful. Please like and subscribe to the channel. Like this video, click the notification icon so that you can be notified of the future videos. And I will see you in the next video.